$20,000 just vanished from a middle-class couple's savings, and their lender called it standard closing costs. Most homeowners believe refinancing is simple. You get a lower rate, sign some papers, and save money every month. That's the wrong belief, and it's costing families like yours thousands of dollars. Here's the correct reality. According to the Consumer Financial Protection Bureau, hidden fees in refinancing can total between 2% to 5% of your loan amount. For $200,000 mortgage, that's $4,000 to $10,000 in closing costs alone. But the real damage comes from the fees buried inside those closing costs: origination fees padded by 300%, title insurance markups, escrow setup charges, and recording fees lenders conveniently downplay. The delta? A family expecting to save $200 per month suddenly loses $10,000 to $20,000 in closing costs, cutting their expected savings by 10% to 20% over the loan's life. For a married couple earning $120,000 annually, that $20,000 gap represents 15% of their yearly savings, directly reducing their ability to fund retirement, pay for their children's education, or build emergency reserves. With interest rates fluctuating between 5% and 7%, understanding how to avoid these mistakes is critical right now. Let's break down the 3 hidden fees that blow up refinancing budgets. Fee #1, the origination fee markup. Lenders are required to disclose this on your loan estimate page 1, line 801. The industry standard is 0.5% to 1% of the loan amount, but here's where it gets worse. The same lender charging 0.75% for purchase mortgage will charge 1.5% for a refinance. They're using the word standard to justify a 100% markup. On a $200,000 refi, that's the difference between $1,500 and $3,000. Most homeowners miss this comparison because they never asked for a purchase mortgage rate sheet. Fee #2, title insurance and escrow padding. Title insurance is a one-time policy protecting you and your lender against property disputes. The actual cost varies by state, but lenders often use it as a hidden profit center. Federal Reserve data shows escrow account setup fees ranging from $150 to $400 for what is literally opening a bank account. Some lenders charge per item held in escrow, taxes, insurance at $5 to $10 per month per item. For a homeowner with annual property taxes and insurance in escrow, that's $120 to $240 yearly, costs that don't show up clearly on the loan estimate. Fee #3, the timing trap. Refinancing interest rates lock when you formally apply, not when you first call. But many borrowers lock too early, then watch rates drop and refinance again within months, paying closing costs twice. Research indicates that refinancing windows last 3-5 days during rate volatility. One household we analyzed locked their rate on a Tuesday. Rates dropped 375% by Thursday, but they were bound to the Tuesday lock. They paid $6,200 in unnecessary closing costs to avoid breaking that lock. So how do you avoid this $20,000 trap? First, request a loan estimate from at least 3 lenders using identical scenarios. $200,000 loan, 30-year term, your credit score. Compare line by line, not just the total. The CFPB requires lenders to provide estimates within 3 business days. Second, break your closing costs into 2 buckets. Appraisal, title, and insurance, relatively fixed, and origination, processing, underwriting, and closing fees, highly negotiable. Lenders will often reduce or waive processing and closing fees to win your business, but only if you ask and compare. Third, use the 2% rule. If total closing costs exceed 2% of the loan amount, ask your lender to either reduce their fees or credit you cash at closing to offset the overcharge. On a $200,000 mortgage, 2% is $4,000. Anything above that requires justification. Finally, time your refinance during rate stability, not volatility. When rates jump 0.5% in a week, lenders tighten timelines and raise costs. When rates are flat for 10+ days, you have leverage to negotiate. The difference between a $4,000 closing cost and a $20,000 closing cost is awareness and comparison. For the full numbers and the lender-by-lender cost breakdown, the deep version is in the companion book, Hidden Mortgage Costs, link in the description. The bottom line, refinancing saves money, but only when you avoid the fees that erase those savings. Smart buyers ask the right questions, keep asking.